All right, so let's break this down because it seems like nobody else is really explaining it like this. Everybody's starting staring at these BTC candles, not knowing what to do, talking EMAs and RSIs and bull flags, but they're missing the whole freaking, they're missing the whole goddamn driver behind this move. So I'm going to go ahead and break this down a little bit. Now we didn't pump to 111K just because of nothing, guys. I don't know if you've seen this news here. There's just two random news stories, news articles. The bond market has pretty much crashed. It pumped and pumped. You can see over here. This is it over here, the 30-year bond market. It pumped and pumped and pumped, and then guess what happened? Oop. Right, right here it started. People, the canary, started hearing things of this new tax bill, and then fears crashed, and that's really what's brought taken us over the 108 mark essentially. So we were supposed to stop according to technical analysis and everything, and just like regular manipulation around 108. That's where I had my TP at and everything, but global reasons, we just say this tax bill and the fear has really pushed it past. And I must say, let me show you why this pretty much why this debt market, the blink, the fear has caused Bitcoin to rise. So the 30-year, it definitely does affect the U.S. debt. Okay, that's one of the main things that it affects. And as a Bitcoin trader, I mean, we need to care. You need to know this. So let me just cut the fluff here. Pretty much the 30-year Treasury, which is on the right here, is you can look up on ChartView. The US 30 Y is what the ticker is. But the 30-year U.S. Treasury, it's about how the government locks in long-term debt. It's what it is, 30 years. That's the longest we have bonds for. But when the yield spikes, that's the market saying pretty much you want to borrow from us, then you need to pay up. We don't trust the government anymore like we used to. That's what's happening is the people that are loaning the government money. And that's a whole nother story. They're essentially saying, look, once they saw this tax bill, they're saying, no, we aren't going to give you any more money, and definitely not at that rate. So what exactly just happened? It was a failed 20-year auction lit the fuse. Okay, and that lit the fuse, and the 30-year 30 yield exploded. Okay, and that's really what happened. It actually exploded way past, because it wasn't, I mean, the people like right here, it exploded way past right here, this 515, and that's not normal. That's crisis mode. Okay, so it's not just another bond move. This was the system creaking, I guess you'd call it, creaking right under everybody's nose. And that's what happened is this was not normal. This was not normal. This somewhat, but this was not normal. This was not normal. Then something was going on. Volatility was coming. It was happening, and people knew it. And that's why a lot of people were selling off. A lot of people were selling off, but a lot of people didn't know it. So they were getting into it. Oh, the rates are down. Let's go. Bonds are down. Let's buy in. Oh, but it was pretty much traps. But by the people that are in the know. But yeah, it's just not. It wasn't just another bond move. And so this system. It was, people now know because of this straight crash and the tax bill about to get passed. They're wondering where they put the money now, because bonds used to be reliable. They used to be the thing to go to, but it's not anymore. This is showing bonds like your grandmother and your grandfather and your parents told you, hey, you can invest in and you will not have any trouble. However, that's not the case anymore. And as you see here, this crash, what happens when it crashes, the yield spikes. And because bond prices, and yields, they move in opposite directions. So the higher the yield, the more expensive the debt for the U.S. So that means more instability and loss of trust in the U.S. dollar, and that's what happened. Dollar went down; it just hit support, but it'll break down further. But that breaks the system, and it scares pensions. Okay, it scares funds, it scares investors, and it makes the government have to pay so much more, the U.S. government. So that's why BCC ripped right here. Okay, this is why this rip happened after 108. Because people decided instead of investing or trusting the dollar, that rot, they decided to invest in something that was a little bit more sustainable. So, what does this have to do with day trading exactly? So, um, my short-term game plan, everything just flashed. My short-term game plan is we're either going to get what I would look for is I would look for a clean retest around 108, and this is for the next 48, 72 hours. I would look around 108, 200. So let me get to 108, 200, right around here. Retest to 106, 800. In this general area, we should get a retest, and then either there we're going to get a retest, or if we could reclaim, everything's just going to lag today. Sorry about that. Everything's lagging. Okay, so you get a reclaim with this here, and what that means is that it actually closes above. So it actually closes above here, and you want to wait for the 111.5 reclaim with real volume, with real CBD, with real continuation through the wick high. You do not enter. You don't want to enter the weak reclaim because it'll come right back on you. But you want to wait for the body closure and with a volume behind it. Get your volume indicators on, and so if essentially two things that you should be mainly looking for, and that is either get a retest down to here, go up, or you're going to get a clear reclaim, retest, probably reclaim down here, and then boom. And then you would see right here, just simply TP 1400. Now don't get whatever you get, don't get greedy, but whenever my pen wants to work, right there, 114 would be a great TP. So there he is. 114 would be a great TP. Yeah, so that's it. Now, if the bonds pull back, BTC might pause. So if it pulls back up here, it might pause, and that doesn't mean that BTC is going to be bearish. It just means really the liquidity is just rebalancing, and you want to use the CBD and delta divergence, volume absorption, all that to time your short-term setups if you want to, but not just don't do the vibes. Don't do crypto Twitter crap. So. Now you also can look at ETF flows. That's another key thing I'll bring up real quick right here. You look at ETF Bitcoin flows. You see what happened here. So let's see. I'm on CoinGlass right here. You see right here this last day. So the red is the outflows. The green is the inflows. You see what happened? There's no outflows. Look at all the inflows. That's telling you that one thing, that Bitcoin's going to keep going. It's going to keep going. Okay, that's one thing. That's big money going into Bitcoin right there. Okay, the ETFs. You see, they're all positive, but really, one of the key things is see over time all this positivity right there, and that's wow. Now see, this is the price of BTC. BTC. Hate that thing that comes up, but yeah, you get the point. So, but if ETF flows like this is, it stays green and bond yields spike again, which bond yields are inversely proportional to this, and that's your continuation signal. BTC, it's going to light another fuse under it. So it may, like I said, blow right through 114 into the premium side, really, and that's the macro range. That's the premium side. It's the macro range up there. So yeah, it's You have to see. But yeah, here's what to watch for pretty much as a trader is you want to look at the CoinGlass ETF for Bitcoin. You want to see the flows stay green, the bias is long, and you want to look at the US 30-year on TradingView. You can do it just like I did it, and make sure you look at the VWAP, the 5-minute, the 15-minute. You don't want to lose the VWAP. That's you don't you lose that at all. So, but that's it. It isn't just everything's loading. This isn't a BT chart anymore. Look, this is controlled by these global factors. So yeah, print really guys, sit there and print your fibs, marker levels, set your alerts. But look, you better keep one eye out on the debt curve and the other on the ETF flow heat maps, like I told you, because the next big leg for BTC, it's coming. It's not coming from your indicators. It's coming from the broken bond market. So keep an eye out.